From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for November 8, 2016. Today we're going to be taking a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. But before I begin that, I think today is a day to expect the unexpected. Of course, here in the US, we have the US presidential election going on all day long. And of course, there will be releases of polling data, rumor, speculation all day long about the potential results of this election. And again, I think we need to expect the unexpected. There could be no movement as we go throughout the day waiting for the election to end. There could be volatility and moves in both directions. We don't have any other real significant news on the calendar during the U.S. session. Some low to medium impact news, but I think it all will be overshadowed by the election results and the polling data and the information that the news outlets will be putting out there. So just be very cautious with your trading today. It could be over the next couple of days as we get the results and people disseminate what that's going to mean for the U.S. in the long run. So just be very cautious. But I think if you're using appropriate risk strategies, you should be able to come out on the other side of this relatively unscathed. If we take a look here at the euro dollar, of course, over the past couple of weeks, we've been seeing a little bit of a rise. Well, last week and a half, I guess, a little bit of a rise for the euro dollar. It went up from the 1.0800s all the way back up into the 11120s, 30s, and 40s. Well, last week, we began looking for opportunities to go short into the resistance level. We could see this descending triangle pattern, the two black trend lines that you see on the chart, the descending triangle pattern. Then, along with that, you couple in the 100 period simple moving average into that green shaded area into the 111.20 level. So we had two things first: the bearish black trend line, the pattern, the descending triangle pattern, the 100 period moving average. Then on the left hand side, you can see the two blue circles just to the left holding as support, and even on the far left hand side of the chart you can see some support into that same green shaded area. And right here in where this green box is, you can see resistance. So we see support, resistance, resistance, support, support. So we knew that that had potential to be resistance. So we took a short last week and yesterday, profit as the market opened up in our favor after the spike after the weekend, the gap after the weekend, opened up our favor. We closed profit into the 110.50s, 60s, and 70s. So that was yesterday, the open of the trade. I went ahead and closed the trade out going into this volatile day that we have, or potentially volatile day that we have ahead of us today. But I think there could be an opportunity to jump back into this with minimal risk. Let's go ahead and zoom it in one time here on the euro. Staying on the euro daily time frame, you can see that yellow zone. And again, we can see the market currently just kind of holding out underneath that yellow shaded area today. And what I'm looking for here is for the market to stay underneath this yellow shaded area, continue to find resistance there, and just drift on back down to the blue zone. Status quo. Look for the continuation of the selling pressure. That's all positive news for the US dollar. So let's put a couple of black arrows here. We want to find resistance at the yellow zone. The risk is that the market breaks above the yellow zone. So we're going to take this little black line here, let's make it red, to represent a potential stop loss for the day. If you're going to take this trade, if you're going to add risk on today, this would be a potential stop loss above the yellow zone. That way, if it breaks back above and starts going back up to the green shaded area, you get out of the shorts. We're going to look to target back down here towards the blue shaded area. Now, to reduce the risk, make this stop loss smaller, we want to sell as close as possible to that yellow shaded area. Just think about the green zone. If you were going to sell it, you wanted to sell as close as possible or even inside that green shaded area to reduce your risk and maximize the potential profit. So the same thing here, we want to reduce the risk. So we're looking at 110.55 at the bottom of that yellow zone, 110.75 at the top. So if you want to get in a little bit of ahead of it, just in case it doesn't go all the way up to the yellow zone, you're looking somewhere about 1.1050 or so. 110.55 is the bottom, so if you want to get right exactly there. I've already set up a pending order at 110.50 just to see if I can get in just ahead of that yellow shaded area. I'll target the blue zone. Of course, if we see a significant move today and a really good, strong dollar positive move, we could even see it all the way back down into the low 109s, the orange shaded area at the bottom of the chart. Of course, the next barrier to break through would be the blue shaded area if it's going to do that. So Let's go with what the market has been currently doing so far this week, which has been a bearish move. Market opened lower than it closed on Friday. We saw the gap. It's now underneath the yellow shaded area. Let's focus in on that. Just do what the market is telling us. Let's go ahead and take it down to the 4-hour time frame. Same thing here. It doesn't change the expectation. We still see it even here on the 4-hour time frame. Still see it holding underneath that yellow shaded area, and that's what we want to focus on. We even see the last 4-hour candle zipping all the way up here into the 110.65 level. We may not see it back at the yellow zone again. We know that we don't want it to break above the yellow zone if we're going to go short. We want to stay out of it if it breaks above the yellow zone. That's our risk. And of course, as we noted, we're going to target the blue zone. And of course, if it breaks the blue zone, just look back here, it's a pretty good chance that we're going to see it pressure all the way back down here towards at least towards the orange zone. Fibonacci, a couple of different ranges with Fibonacci. You can see where they overlap here, just underneath the yellow zone. 382 of one of the longer down ranges sits here at 110.14. 50% of this current up range sits here in the middle of the blue zone. So we have some expectation that it stays under the yellow zone with Fibonacci as well. Heading back to the blue zone would be your next target on the way down for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.